Welcome back to Opening Bell. Joining me right now, Chris McMahon, President and CEO at Aquinas Wealth Advisors. Thank you so much for being with us. You're looking at today's market action. You've got the past year in your head and looking forward as well. How do you feel today here with the market action today? What grabs your attention?
I feel way better today than we did April. Remember April when the tariffs came out, everybody said it's over and the bubble's going to deflate. I think we're optimistic. I think we share the view, like Deutsche Bank, like JP Morgan. We think next year there might be some pushback a little bit of adjustment. We think ultimately we're going to have a decent year in the market. The Mag 7 has been so concentrated over the last 16 months that we think it's going to spread out. We're going to see some of the regular blue chip stocks do well. So we're actually very optimistic. Interest rate cuts coming. We think we're going to see some good things happening in the broader markets, and we think it's going to be a spreading out of a little bit more riches for everybody as opposed to the Mag. Really, the Mag 6 is what it was for the last 18 months.
So you would say you're more bullish than bearish.
Yes.
You know, what will be the catalyst? You're giving us some of it. Just continue to talk about what drives this market. I mean, you're buying on dips, I presume. What are you buying? Things like that.
We are buying on dips. I think you're right. What drives is just consumer sentiment. I think this used to be a stock picker's market, and all the pundits got to make all those, got to decide what happened in the market. And it seems like consumers are taking a stronger position. It seems like this kind of decentralization with crypto is taking place in the equity markets as well, where we're seeing consumers drive things and disregard what the pundits are saying. We've been talking about a deflation, as you know, for 3 years. And the consumers just didn't have the appetite for it and said, no, and we're going to continue to drive this market. So I think we look at, first of all, consumer sentiment, number one. Interest rates, number two, is a huge thing. And I think number three is just the general business climate. And these interest rates coming down, we think is going to really push, particularly housing. We like that very much. And we think healthcare is poised for a pretty good comeback too. So as we look at things today, we're still holding technology. We're certainly not, selling the technology, but we're saying maybe take those out, trim those allocations a bit. If you're normally 16, 17% technology, maybe you get back down to those numbers, maybe you can go down to 15. We're seeing some portfolios, though, as high as 25, 30% technology. We're saying maybe trim some of that and go find some of these other stocks that we've been talking quite a bit about,